Alright, so let's move on with the next lesson, which is money, risk and trade management. So for this we have 3 points that we need to understand in every single trade. We have 3 points. We have the entry point, which is basically the confirmation that we use to enter a trade. We can enter a trade based on any time frame. So we can enter on the 1 hour, we can enter on the 50 minute, 5 minute, 1 minute, and even the seconds. The entry is not that important because anyone can enter a trade, anyone can press a button, but not a lot of people can be profitable doing this. Second one is when we're reducing risk or exiting the trade early. So I do recommend most of the times to reduce risk on a trade if possible, as much as possible, because in trading basically we need to keep our capital. We're in the business of keeping our capital, not risking our capital. So it's important to be as aggressive and best as you can when managing risk. Reduce risk as much as possible, and also exiting the trade early if you see it's not going to go in your direction. Third point is the break-even point. So when we're completely taking risk off the trade and leaving the trade to run. And then the fourth one is the exit point. So when we're taking profit. It's 4 points that you need to understand in trade management. Not a lot of traders and mentors talk about this. It's overlooked. They never talk about how to enter the trade, how to reduce risk, how to exit early, how to break even, how to exit the trade at final DP. They never talk about it. So it's very, very important to understand. First one, we got the entry. So the entry point, as discussed, I will show you every single type of entry you can take from 5 seconds all the way to the 50 minutes, 1 hour entry, but most likely we're going to use 5 minutes and 50 minutes for entry. The reason for that is from my back test and my years of journey, I noticed that the best way and the best basically balance between risk and mental health, basically because in trading it's important to keep your mental health in check, is this balance. You need to have a balance. If you trade only take entries on the 5 second, your mental health is going to go down. If you only trade on the 4 hour, take entries on the 4 hour, your patience is going to be tested. So it's a balance that you need to understand and keep in order to be successful. For that reason, on entries, I will talk about later after we go over 1 minute entries, 5 second entries, and putting everything together to take entries. But what's very important is you always need to risk the same percentage. So always the same percentage per trade, either 0.25% or 0.5% or even 1%, 2% on a challenge. But you need to keep the same risk percentage on account based on a series of trades, because if you risk on the first trade 0.5, next trade you risk 1%, next trade you risk 0.25%, you may lose the 1% trade and win the 0.25%. So your trading plan has the same win rate, but because you used a different risk percentage, you're not going to be profitable. So you need to use the same risk percentage and let basically the trades play out to see the results, the end results. Second point, reducing risk and early exit. So reducing risk, this is something that I personally do a lot of times, especially when I'm entering on the 1 minute or 5 minutes. So I'm entering more aggressive on tighter stops. There's a few examples in the Discord group where we had trades, for example, on EURUSD. I think this was a trade. So we enter our trade here and we have our initial stop loss for 30 pips. We entered there, and now that we have our entry, we have our exit. So let's say I'm aiming for this, or let's do even higher stop loss, 40 pips on gold, and I'm targeting a 1 to 3. I enter with a bigger stop loss to let the trade play out, and now we have a very good reaction. You see, surprise immediately runs into profit. Now, when you have something like this, there is no reason to keep your initial risk in place because you had a nice reaction that you wanted. You have a good entry close to the low, and now if price returns here and makes a new low, then the trade idea is invalidated, because you see here, it failed to create that change of character. It failed to create a V-shape. It just came to that supply zone, gave a bearish reaction. So for that reason, you need to reduce risk, because if it's reacting from here, it might as well just create a new low, and then you can look for a re-entry. So when I see something like this, I immediately reduce the risk below this low. So from 40 pips, I get it to, let's say, 15 pips. So I reduce the risk a lot. That way, I can mitigate my losses if it didn't work in my way. And now, waiting to see what happens. I'm not placing break even because you can wick the entry, retest, and then go on. I'm only placing break even, and this is the third point, the break even point, after I see a valid break of structure. So usually when you enter a trade, so price comes down, you enter a trade here, you have a nice reaction, then price comes back down. It might retest the entry a couple of times, and then it pushes and creates a new break of structure. So after price comes back and mitigates your entry and creates that new break of structure, that's the point where you want to go break even. So here, you just, after you made the break of structure, you just go break even, because there's no reason for price to return back to your entry again, because it already mitigated. Or there's a situation where it doesn't mitigate, but it creates a new high. So you have another impulse, price hits your take profit, but you just go break even. So that's the way I manage trades. the best way from what I backtested and what I used. Always you need to reduce risk. So because that way you can remove a lot of risk from your trade. And early exit, usually when you see the situation that I told you, so price comes down, gives a reaction, you enter the trade here. Price then comes here to mitigate your entry, plays around a bit, spikes down, creates a new break of structure, and then starts to pull back to your entry. I usually just exit the trade there. So I exit at 0 loss. Basically, I'm exiting where price went in, but because I have a bigger stop loss, price is playing out. It doesn't hit my stop loss. It creates a new break of structure down. So it invalidates my idea of going long, of taking a buy. And I just close the trade at break even, and then basically what happens usually is price retests and continues down to the stop loss. So it's very important to manage the trade that way also. That can happen a lot of times, especially when trading a reversal, right? So when you don't really have a lot of confirmation, price just touches your POI and you enter. Yeah, that can happen. So it's important to manage. And I told you I usually add another entry. So if I see this, all right, I have the first entry here, and then I take a second entry here with that spike down, that candle close. And when price comes back at break-even point, I basically close the trade at break-even because it exposes me to more risk, unnecessary risk, because I want to have the best possible entry. I don't want to have an entry where price just wicked down half of my stop loss and then came back to my entry, and from there I'm expecting it to move way higher. That can happen when you have a good trading idea, but I don't like the potential risk of that. So I prefer exiting the trade, especially since I add another entry here that's way in profit. When this hits, exit the initial trade and then keep the other one running. So that's a perfect example now with EURUSD. So I took an entry here, exact same setup, and then I took another entry here, right? So I took 2 entries. First entry I took there, price was ranging, I wanted to enter, and then price wicked down, gave another confirmation, I entered another trade, price started to go in profit, I closed the first trade at break even, no loss, and now I have the better entry basically running at break even. So whatever happens. That's how I manage the trade. If it goes to my take profit, then I make money, and I don't care that I closed that trade at break even because I reduced risk and I exited when I had to. Break even point, as I said, always after a break of structure I go break even. So if I entered here, right, let's say I entered here, price comes down again, creates a new break of structure, not the first one, because after it creates a break of structure after your entry, price usually returns to retest and can take you out at break even. It's way too early. You wait for price to mitigate, and here you manage the trade. If it closes below, you wait for it to return a little bit and take a small loss, or you get another entry if it's still valid and you exit the next trade. You wait for it to mitigate, give reaction. When it goes on to create a new break of structure, that's when you go break even, because now there's no reason for price to return and retest your entry. There's no reason for that. If it does that, then most likely it's going to go down. So it's unnecessary risk. And now I'm running the position break even, and that's how I manage the point. And for exit point, I exit at liquidity, which in this case would be Asia high. So I'm aiming for that to exit the trade, but I may exit if I see price failing to make new highs, or just we're going to New York doesn't do much, it's just ranging. And let's say it comes to this supply area and it fails to break and just ranges here, then I might exit the trade as it is Friday. So it's no point in taking a losing trade, and just exit the trade and wait for the next setup. So it's very, very important to know how to manage the trade, and hopefully this video does bring some quality information on how to manage trades. But you'll see that along the way by following my process and how we take trades. You'll see how I manage them very aggressively, how I reduce stop losses. A lot of trades that I take, even in the trades signal channel, a lot of trades that started with a 0.5 risk and were gonna end in a full loss, I managed them to only take a 0.1 loss or a 0.25 max, so half the risk. Usually I'm right. So it's very important to basically keep as much capital as you can, and then from there go on and make some profit. So thanks for watching this one. I'll see you guys in the next one where we're gonna go over entry models.